Hey everybody, this is Ryan Mallory, and we're going to do a update on the stock market. What should we be doing right now with our trading? Should we be getting more conservative? Should we be getting more aggressive with the SP 500 trading day after day after day at new all-time highs? What is the take going forward? Should we be worried about a stock market correction, or even worse, a stock market crash? I'm going to talk to you about the technicals of the stock market, what you need to really be looking at. We're going to get into all of that and more in this video right now. First off, you have SPY. That's a ETF that mirrors the returns of the S&P 500. It put in a double bottom back in September and October, and then it finally broke out in late November, and now we're continuing that here in December. Now, a double bottom is oftentimes a very bullish sign for a stock or an ETF or an index as a whole. And what that is when you have two consecutive bounces off of the same price level. That's what you have here going back to September and back to October. And then once it breaks the neckline of that pattern, that's when you get that big breakout. So we have that on SPY. Now it just becomes a matter of whether or not it can continue this rally. The follow through is going to be huge. Now remember, SPY is up 4 out of the last 5 weeks. You have the Qs up 3 out of the last 5 weeks. And then you have the Russell, the small caps, they're up 5 straight weeks. Clearly, the most strength lies with the Russell right now, but that also means too that it's getting a little bit overextended as well. I'll go ahead and get into that chart in just a second. Now, also promising on this long-term SPY chart, using the weekly time frame, is this huge resistance level that went back to all the way to 2012. Why is that so important? Is because time and time again, every time it was tested, even if just barely, it led to some dramatic sell-offs, except for back in 2014, 2015, when it rode the underside of that resistance level. Since then, it's seen some really sharp rejections at that price level. But over the past month, we've done something that we haven't done over the last 10 years, and that's actually break above it. I'm a little bit skeptical whether or not we can actually sustain that momentum above it. I know a lot of people out there are now saying, hey, we're going to crash, you should expect a pullback. Nobody really knows that. Nobody really knows that at all. It's easy to pontificate that or to really guess that, but until we actually see it, it's impossible to know. When you look at the chart on the weekly, look, this thing is as bullish as it's ever been. It's at all-time highs. It's still making new all-time highs. And until you really see a change in the character of the market, it's really hard to get behind any kind of bearish thesis at this point in time. For me, on the weekly chart of SPY, I would need to really see it break below 319, which is also where that double bottom has been playing out over September and October that I just talked about on the daily chart. If it breaks below that, that would mark a key change in the character of this market, but we're not there yet. So for now, I can remain bullish on this market. And here's one thing too, and I think for a lot of new traders, they don't realize this, but oftentimes our feelings will dictate whether or not we're bullish or bearish on the market. My feelings right now is I don't want to be bullish on the market, but what does the charts tell me? And then I got to follow the charts. My feelings are one thing, what the charts are telling me is another thing. For me personally, I'd love to see a big contraction in this market. I'd love to get short on a few stocks here because there's some glaring overbought stocks out there. Take SQ for instance, right? But I'm not going to go short SQ. I'm not going to go short Tesla right now. I think it's crazy because the market hasn't showed any slowing in momentum. There's a few divergences, and I'll get into that in a second, but overall, the market is still showing a lot of momentum. So until the market really starts to slow down, there's no sense in me really getting short on any stocks in particular. Now you can also see this resistance level that we've broken above on the daily chart as well. And unlike times past, we're not breaking down. And instead, for the first time ever with this resistance level over the last 10 years, we're trading above it. Now I also like to tell you real quick about my YouTube membership channel. You can join it by clicking the join button down below. With it, you're going to get all my market research each and every day. That's going to be my watch lists, my daily setups, the stocks that I'm finding the most interesting from a charting standpoint. I'm going to send those out as well. You're also going to get updates on the FANG stocks. That's Facebook, Amazon, Apple, Netflix, Google, Microsoft, and Tesla as a couple of bonuses there. And you're going to get regular updates on the S&P 500, the Nasdaq, the Russell, and some of my proprietary indicators as well. So make sure you check that out. You can find out more about it by clicking the join button down below. Now, how about the Qs, the Nasdaq? This is the ETF that monitors the Nasdaq 100. That's the top 100 stocks in the Nasdaq. It's been trading sideways since late August, hasn't done much. You still have a little bit of that double bottom, but it's more actually of a triangle pattern. Triangle patterns are interesting because they actually mark consolidation in a stock or an ETF or an index. And the more narrow that triangle gets, the more likely that a breakdown or a breakout is imminent. So we finally got the break. It went to the upside and you formed new all-time highs this past week, but we're up 9 days in a row. It's very hard for an index to rally 9 days in a row. When you start seeing 7, 8, and 9 days in a row, you should probably start to expect at least a mini pullback. That doesn't mean that I'm saying we're gonna crash below the September lows. I'm not saying that. All I'm trying to say is that after 9 days, you may start seeing a little bit of a pullback here. That doesn't mean you have to get bearish on the market or even short the market. You just gotta be patient. And so much of the stock market is about patience. We oftentimes lack the necessary patience to be successful traders. When you don't know what to do, or when you're feeling the urge to do something but you're not sure what it is, don't do anything at all. Just be patient. Let it become more obvious what the right decision is to do in the stock market. And the more time you give yourself, the more obvious that right decision will be. The best thing for the Qs would be if we could get a bull flag pattern in the short term. Bull flag pattern is basically going to be a sideways to slightly lower channeling where you don't give up much of the price action, but you don't really move higher. You just kind of slowly, steadily sell off a little bit, but the price action is essentially going to look like a flag on a flag post. Portfolio management is very critical in the stock market right now. The urge is to get as long as you possibly can. You get about 9 days in a row on the Qs, you start to feel invincible. It starts to become too easy and you start to think, I'm pretty good at this stuff. Never think that. When you start to think that it's too easy, it should be a warning sign. It should be a red flag that, hey, this thing might go to crap on me here and I'm not going to be prepared for it. It doesn't mean it's going to happen every time, but when it becomes too easy, that's usually a bad sign for the stock market. Almost every time where I start to think this market is too easy, that's usually my clue that something's about to happen here. It's getting to that point where it's very easy, so be on guard. I'm not saying sell everything. I'm not saying, hey, you got to go short or buy a whole bunch of YOLO puts. I'm just saying, be careful here, okay? You don't have to pile in at that point. When it becomes very obvious, that's when most of your traders start piling into the stock market at these new highs. What you want to be doing is already be in the stock market. There's a lot of anticipation that has to happen with the stock market. You can't just look at it and it's like, oh man, it's been bullish for the last 8 months. This would be a great time to get into the stock market. That's not where the profits are made. The profits are made is when you do the analysis and realize, hey, the market's about the bottom, it's about to rally, let's get long on it. But you don't want to start getting in at September and October highs like so many other people have done. Instead, you want to be the person that got in around April and May of this year. You don't have to hit the bottoms and you don't have to hit the tops, but you got to get that middle section of the market rally. Now, I always enjoy this particular chart. It's available through TC2000. There's a link below in the description. I use TC2000 for all my charting. And what I like about it is that it has a lot of different indicators that I find very useful. One of them is the T2108, and where I find this particular indicator very helpful is determining how bullish or bearish a market is. Now, when it gets to extremes, that's usually when you're about to see a top or a bottom in the market. Right now, you're sitting at about 80%. Above 80% is usually your extremes. I've seen it get over to 90s like what we saw back in June, but then again, you can see we saw a pullback that happened thereafter. Now, one of the other things that I find interesting about this chart is when we start seeing divergences. When we start seeing divergences, usually it means that we're going to see some selling in the near term. Right now, we're hitting new all-time highs, but the T2108 isn't actually moving higher with the market, which tells me this is that fewer and fewer stocks are actually participating in this rally. Now, one of the things that I also find very interesting, one of the other things that I find very interesting in this market is some of the sectors that are rallying it right now. Over the last month plus, energy has been the major rallying point for this market. If you're not in energy, you're probably not making nearly as much money as you think you should be making right now in the stock market. Because energy over the last month has essentially gone up 50%. Look at XLE. It is through the roof right now. And yes, it's lagged the market quite a bit, but that is what we have rallying stocks right now. It's usually energy at the top of the leaderboard every day. Right behind it's the financials. And below that is usually either your metals or your industrials. Those are the stocks to be rallying in. The tech stocks right now are the ones that are struggling. They're not really keeping up. Yes, they started rallying. You saw the Nasdaq over the past week really start to kick it in gear again. But over the past month, it's not been tech. It's been more about your energy and financials. And when the stock market's rallying, it doesn't mean that all the sectors are rallying. It may mean that there are only a few sectors rallying. So it's important to know which sectors are rallying so that when the market does rally, you're actually in those correct sectors. My approach here right now, I'm oftentimes taking profits on my existing long positions. I'll take a third here off the table. I'll take a third here off the table. Like for instance, I'm in Micron right now. MU, it's had this incredible breakout. I'm up about 45% on the stock right now, but I'm down to my last third of a position. I've been taking profits along the way so that when this stock does eventually pull back, I'm not left holding the bag for everybody else to get out of. I've been taking profits along the way, and I'm at a point where it's like my ride or die position. I'm willing to see how high it can go before it eventually does top out and start to pull back. At that point, that's when I'll get out. But I'm not aggressively adding new long positions at this point in time. I'm taking a little bit off the table here. I'm adding some new positions, but all in all, I'm looking to always be taking profit any place that I possibly can, because I do know that while this market may continue to run higher in the near term, it's impossible to know when it's going to actually top out. So as traders, we actually need to be anticipating that. We need to be asking ourselves, are we putting ourselves in a position to where if this market does pull back, am I going to be the one getting destroyed? Am I going to be the person that loses all the profits that have been so steadily building over the past few months? So you don't want that to happen. Yes, it may not happen anytime soon, but you need to be trading as if that could be the case. If you enjoyed this video, I'd encourage you to like this video. Also, subscribe to the channel, because you're going to get a lot more videos of this kind of stuff each and every week. I'm here to help you grow as a trader. I know there's a lot of you guys out there that are in the stock market for the first time, and that's what I'm here to do. I enjoy teaching. I enjoy helping you guys. So help me back. Subscribe to the video. It helps me continue to grow and build this channel. Also, tell me down at the bottom, what is your best trade over the past month? November was an incredible month for stocks. I want to hear what your best trade was and what trade you're hoping that will do you well in December. Thank you guys, and God bless.